Forbearance, loan modification, loan deferment programs, loan repayment programs. What the heck is all of this? How does it work? Should you contact your bank? And when you contact your bank, what strategies should you be prepared for or have to be able to make the most effective decision for yourself? Well, I'm going to get into this because fortunately, I have a ton of experience in this particular area. 2007, during the last housing crisis, and when Congress released the TARP, we had a small division that assisted homeowners that had hardships, whether it be a short sale, whether it be a loan modification, whether it be a forbearance, whether it be a deferred payment or repayment program, you name it, we did it. However, we had to fight very hard to make this happen for all of our principals, borrowers, and homeowners. It's a little bit different with the CARES Act. And quite frankly, I think there are provisions within the Act that are pretty good. We're going to get into it. And hopefully this information will help you decide whether or not you should move forward with a forbearance program, or at least have the ammunition to be able to contact your bank and design the best program for yourself. Stay tuned.
This video will cover aspects of loan forbearance as it relates to the CARES Act signed by the President in March 2020. I am Gregory Holmes with Coldwell Banker Holmes Team's Decisions. And don't forget to subscribe if you would like more real estate related videos in the future.
All right, everybody, a quick introduction as well as a brief history lesson. 2007, during the previous housing crisis, Congress released the Emergency Economic Stabilization Act, and that created TARP. TARP stood for Troubled Asset Relief Program. Well, you know what? TARP was horrible for the homeowners. It was great for Wall Street and the banks, but it just didn't do a lot in terms of protecting folks who wanted to keep their house or even sell their properties under their own terms. We had to fight for everything. We had to fight for the loan forbearances. We had to fight for the deferred payments. We had to fight for a repayment program. We had to fight for loan modification. It just didn't do a great job. Fast forwarding to 2020, we now have the CARES Act. The CARES Act is completely different. And if you read what the title act is, CARES stands for Coronavirus Aid, Relief, and Economic Security Act. Just in the name itself, it's kind of built around protecting many of all of us in a tough situation. So just so you know, it's an 880 pages. Yes, I went through a lot of it. I got a lot of time on my hand, and it does, the provisions surround around really giving us relief and hopefully securing our economic future as a country and as individuals. We're going to focus on the forbearance. The forbearance program in the CARES Act is an actual provision designed towards giving the homeowner the right to a forbearance. Again, they're giving the homeowner the right to a forbearance. That's a huge difference than what existed in the past. What do you need to do when you contact your bank? Is it a great program for you? That's going to be up to you to decide, but you do have it as a right to execute if you feel that you have a hardship due to the coronavirus. So we're going to dig into a couple of details. We're going to dig into what you should do, what to watch out for, and the benefits of this particular forbearance program. Okay, so the first thing you want to think about with a forbearance is that a forbearance is an agreement between the borrower, that would be you, and your bank to either reduce your monthly payments or suspend your monthly payments for an agreed length of time. And however, it is not a forgiveness of debt, so you still owe the money. There are different ways it's handled when that term is over, whether it be a lump sum payment, a payment amount that's amortized over a short span of time. That all can be negotiated, but the most important thing to remember is that it is not a forgiveness of debt, and when that agreed term is over, you need to commence on those payments. But it still is very helpful, especially if your situation is short-lived. The forbearance is specifically written into the CARES Act, which means it's embedded in the law. It states that the homeowner has a right to a forbearance as long as the homeowner has been affected by the coronavirus and the loan is federally backed. If that's the case, then you have a right to request and be granted a forbearance. federally backed loans could be a Fannie Mae loan, a loan that is under Freddie Mac. It could be a VA loan, and there are a few others. And there is a link that you can go to, and I'll include this as a part of this video that you can look up, but you can put in some information, and that link will let you know whether or not your loan is federally backed. If it is not, you will still probably be able to get a forbearance. All right, secondly, forbearance terms. If you contact your bank and request a forbearance, you can expect to get right off the bat 90 days. However, the CARES Act does provide a 180-day forbearance for the borrower or homeowner. So just know that it's in the pocket. That is why most of the institutions are basically saying contact them in the 90 days, and you will probably be able to extend it if necessary, or of course work out arrangements to resolve the conclusion of your forbearance. But it does state in the CARES Act that there's a 180-day forbearance that the borrower has a right to, and in addition to that, up to a 180-day extension if requested or required. So again, it's very powerful, whereas the time is allotted to be able to extend and have a very lengthy forbearance period. The next thing, the third thing you want to focus on, and many people have questions about and concerns, is what happens to your credit? What's going on with the credit reporting aspect of this? Alrighty, what's encouraging is in the CARES Act, credit reporting is also covered as it pertains to forbearances. So if you enter into a forbearance agreement with your lender, then the CARES Act states that as long as you stay within that agreement, then the lender cannot report any type of derogatories on your credit report. So of course, if you're not making any payments, the big concern for many people is that what's happening to my credit? Am I going to get 30, 60, 90 day late? That answer is no. So if you were current prior to entering into a forbearance and you stop making payments, then the lender is to be reporting your loan as current as long as you stay within the agreement. If you were delinquent, then it will stop and your delinquency will still be in effect. However, you have the opportunity to bring it current and it will report it as current, or of course, when your forbearance is over with, it will stay in that same delinquent status, but you will not be further put into a derogatory status once you enter into the forbearance program. That is very encouraging. So the credit aspect of it is really good for folks that do decide to move forward with a forbearance and you're current. So fees are also covered in the CARES Act regarding the forbearance program. It states that the normal fees will be applied to your loan if you enter into a forbearance program. Those normal fees would be the interest fees that would be calculated when you make payments. So those fees would add up as though you were normally making your loan payment on a month-to-month basis. However, any type of penalty fees or additional interest for those payments not being made are not allowed in the forbearance program that you're granted under the CARES Act. That is a positive. So there's not going to be anything additional other than what would be applied if you were normally making payments on your loans. Okay, Flash, at the end of this video, I'm going to give you a list of things to do for when you do decide to contact your bank and ask for forbearance. A little bit of a strategy, what to expect, and what's on the table for you. Foreclosures are also covered in the CARES Act. It basically states that there is a 60-day moratorium on foreclosure starting from when the president declared this as a national emergency. That could change. But it does state that if you are in a foreclosure process, the bank cannot initiate a foreclosure process or continue with that particular process until that moratorium is over. So that gives some relief to really address what you can address in regards to keeping and saving your home. So some important things in regards to the forbearance though, just determine whether or not it's something that you need or want to do. It is your right to request a forbearance. And again, as stated earlier, if it's a federally backed loan, and if you are in a hardship that was created by the coronavirus, which we all are, then the bank with minimum to no paperwork is required to give you that forbearance. Your forbearance will most likely be 1 to 3 months right off the bat. But within the CARES Act, it does state that it can go as high as 180 days plus an additional 180 days in regards to an extension. Remember, the forbearance is not a forgiveness of debt. The money will need to be paid back, but then a strategy should be made by every homeowner or borrower to be able to pay those funds back, and that can be negotiated as well. Loan modifications will most likely be on the table. We have done loan modifications as recently as 2 weeks ago. So keep in mind that everything is available for you, the homeowner or borrower, because it is your property and it's your responsibility to structure whatever's best for you. And that could be a loan modification, that could be a deferment, that could be a repayment program, and that can be a forbearance. The forbearance is the first line of defense. The banks are going to want to do it right off the bat because, again, they're saying that we're going to give you time to either reduce or postpone your payments, but we want all our money back. And that's okay too, because the time is all many people need to be able to get back on their feet or address a new strategy to be able to attack what's going on with this environment. So those are some important things, and we will have another video that addresses a little bit more specifics on the strategy that you can apply when you're contacting your bank. If you're uncomfortable with contacting your bank, you can have a friend, a family member, or a professional negotiate or call on your behalf. All you would need is to sign an authorization to speak on your behalf, and that person that you designate can contact your bank. Most institutions will already have a form, or just check on a link in this video that I have, and I have a copy of an authorization to speak on your behalf, and you can take that copy and modify it for someone that you do know, or feel free to contact me if you have any general questions, and I'll be more than happy to answer any questions that you have that you have. Right? So, got your pen, got your paper. All right, here goes. I am going to give you a list of things to do and prepare for when you contact your bank and ask for a loan forbearance if that's the direction you want to go. Number one and number two are not necessarily required, but you should do it just to be prepared. So number one is calculate your net income. When you contact your bank for any type of a workout program, loan forbearance, loan modification, deferred payment, most banks will ask for what's called a financial statement. Financial statement would be a list of all of your expenses and also the list of your against your income that you're generating. So you just subtract those two. That's going to give you your net household income. Banks will use that to calculate whether or not they're going to grant you a particular program. In your case, it's really good for you to know. Now, again, with the CARES Act, it's not required to submit any type of paperwork to be granted a forbearance as long as you have a hardship that's created by the coronavirus. But it's still good for you to know, and it's great for you to do. It should only take you about 15 minutes. Number two, take your monthly net income and multiply that by 12. That's going to give you your yearly income. You need to find out what your financial resources are for a whole year. I think that's very important because things are going to happen that are going to be unforeseen, might cost you more money. There could be additional expenses. You need to know how much cushion you have. That's just important for you to know. And it will also prepare you for if you are in a conversation with an actual human being when you contact your servicer, a lender. Number three, call immediately. Don't waste a lot of time doing this, number one and number two. This should only take you 30 minutes, as I said earlier, but pick up the phone and call immediately, especially if you're already running into some type of a financial hardship due to the COVID-19 situation. So call the bank immediately, pick up the phone. Don't be afraid. And as I said before, if you're uncomfortable, you can have someone else call on your behalf. There's a form you fill out. Let them take care of that. I have that in the link, but feel free to contact your bank. They're ready and willing to help. Don't waste any time. Don't waste any time. Do it. Number four, be aware that if you contact your bank or when you contact your bank, you may go right into some type of an automated system, which will grant you a forbearance even without you. You'll know because you're going to have to click yes or no, or one or two for yes or no, to answer a couple of questions. The main question is that, are you experiencing a hardship due to COVID-19? If you answer yes, that system may automatically put you into a 3-month forbearance program. So if you need it, you got it right there. It will already vet out whether or not you have a federally backed loan. And in fact, if you don't have a federally backed loan, a lot of institutions are still doing it. So just know that you might go into an automated system that's going to grant you a forbearance. So know that you want one if you do decide to contact your bank to get one. Not going to have an opportunity to talk to a person. All right, the 5th thing you want to do, when and if you accept your loan forbearance program, make sure you write down the start date of your forbearance and when your forbearance ends. And most importantly, contact your bank 1 month before the expiration of your forbearance program and prepare and work out arrangements on how you are going to settle the forbearance. Keep in mind that you have options with that. It doesn't necessarily have to be one lump sum. You could pay back the forbearance amount over 1 month, 2 months, 3 months, maybe 6 months. You can actually build that into your repayment program. That's what you'll probably go into. You can actually request to have it deferred. There's many options that are available for the conclusion of a forbearance program, and it's not just paying in a lump sum or in a very short span of time. So just know that and keep that in mind. But most importantly, contact your bank 1 month before to get that ball rolling so you are prepared for what you will need to do. Number 6, if you are not thrown into an automated system and you do speak with a human being, that's great because it's going to be a very brief conversation in regards to your forbearance request and approval. However, you could take that time to find out what options are available when the forbearance ends. They may not be prepared to give you the answer, but you can ask the question. And one big question you want to ask, most important, is ask if you can have the forbearance amount deferred to the end of the loan. That's the best case scenario. Remember, forbearance is not a forgiveness. You still owe the money, but there are ways or options where you can take the money owed, add that to the end of the month or end of your loan, so your payments will never have to change. It just starts up again. So if you have 100 payments remaining on your loan and you took a 3-month forbearance, then you will then essentially have 103 payments. So 3 extra payments at the end, but it doesn't affect the amount that you're paying. It might be a lot to get into in the beginning, especially since there's a high volume of people requesting forbearances, and it may not be the time, but just know that's an option on your table, as well as loan modifications. But if you speak with a person, then ask if you can have a deferment of the forbearance amount placed onto the end of the loan. It's great to incorporate. Okay, the 7th item is once your forbearance is granted, and it will be instantaneous, request it in writing. No matter what, even if you have to make multiple phone calls or send an email, get your forbearance in writing. It's very important whenever you're dealing with anything pertaining to your loan and servicers. Right. The 8th item is take the time out to set up an online account with your servicer or lender. It's great to have because anything that you do will be obviously documented in that online account. As it pertains to forbearance, when your forbearance program is approved, then you'll be able to see, so when you go into your account, it will show you that you have an approved forbearance, and you can utilize that as your record keeper, and it would be great at the time that it started, and it will also should tell you when your forbearance ends. An online account is a really strong tool to have when you're interacting with your servicer or bank, especially in these times. So take the time out, set up an online account if you don't already have one. All right, number 9, create a slush fund. Once you have your granted loan forbearance, obviously you can stop making payments because that's what a forbearance is. But when you stop making payments, if you're in a category where you still have the money to pay your mortgage, then take the mortgage amount each month and create a slush fund. Open up an account and place that money into the account for each month. Because when your loan modification or when your loan forbearance is over with, you will need to contact the bank and settle that forbearance amount. The settlement, as we said before, can be either one lump sum, it can be spread out over 3-6 months. Maybe you can negotiate a deferred payment, or maybe you can negotiate some type of a loan modification. That's a whole nother video, another conversation, but it's important to be prepared. And the only way you can be prepared is by creating that slush fund so that whatever option is best for you, you can execute. Create a slush fund. And lastly, number 10 is prepare for that phone call. You want to contact the bank a month before your loan forbearance expires, as stated before, but prepare for the phone call. Know what your financial situation is by doing a financial statement. Know how much money is in your slush fund. Therefore, you'll have an idea of what you will be able to work out, because if you can't pay the money up front, then that's going to be a candid conversation you're going to have with your institution, and they will work with you because of what we all are faced with the COVID-19. You may have to push a little bit harder, but remember the options are on your table. And as I said before, you could have a professional speak on your behalf. It is not necessary. You should be able to handle this yourself. But if that's the case, then fill out a authorization form and have a family member that's experienced in that particular arena or professional contact the bank so they can create the best terms for you. Good luck. That wraps up loan forbearance. I will have another video on loan forbearance that will cover details that might be missed. I'm going to review our CARES Act one more time, help out a few clients that are requesting modifications and loan forbearance, and prepare videos that will deal with loan forbearance, loan deferment, loan modifications, and anything pertaining to real estate.